Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be with you, Jim.
Hilliard, in Alberta, the Teck project in the oil sands has been postponed or called off. It was worth $20 billion. What kind of a blow is that to Alberta's economy, which has been in the doldrums for quite some time?
Well, I think it's more symbolic because than a real impact, because it wasn't. There was no construction started yet, and the proposal was for a very large project. I think the barrels were 250,000 barrels, which is significant. So to give you some idea, the total exports from Alberta are around 3.5 million barrels. So that would be a very significant increase, assuming it was all exported. But Teck, in their feasibility study, they were assuming $90 or $95 per barrel of oil. And that's so far away, and it may never happen. So, plus they have just taken a almost $1 billion write-off of their first project, which was the Fort Hills, which they owned 20% roughly of, and they had to write it down by almost $1 billion because the economic value of that project has declined since they spent all the money on it. So, I don't think Frontier was going to be built, and probably never was going to be built. It's also not, it's a difficult project because it's way further north of Fort McMurray than the other projects, so it would require, that's why the $20 billion cost, it requires a lot more infrastructure to be built. It's not close to the other projects, so it can't share infrastructure. So the whole thing was, and I think in the beginning, Teck was hoping to get approval, so they didn't have to write down the cost. I think they've spent something like $1 billion on just the preparation and the planning and the studies and all that sort of stuff. And now that they've withdrawn their application, they'll probably have to take a write-off of another $1 billion, which is a pretty big hit because Teck is not that huge a company. So, but symbolically, to answer your question, it sort of sends a message of what probably most people probably already know, which is the growth in the oil sands is probably over, and there's not going to be any future growth there. But there's a lot of people in the world and in other parts of Canada that are not as aware of that as people close to it. So it sends a message, I think, that things have come to a halt. Now, the existing plants are still producing. There hasn't been any change there, and the Americans are still buying the diluted bitumen. So there hasn't been any change there yet, but it's not a growth industry anymore.
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the Alberta Court of Appeal has ruled 4-1 that Ottawa's imposed carbon tax on Alberta is unconstitutional. Is that seen as some kind of victory in Alberta?
I don't know. I remember in the 80s they used to have these court challenges, and the ones that I remember were pretty much all political. If somebody would put up a court challenge, and it would go to the Alberta court, and of course the Alberta court doesn't really have jurisdiction on constitutional matters, so it'll go to the Supreme Court of Canada, and the decision will probably change. Because the federal government does have, if you think about the environmental file, there's joint responsibility between the provincial government and the federal government on the environment. So it's hard to imagine that ruling will stand up, but I think it suits the political narrative of the Premier of Jason Kenney of Alberta. So, but I think it's just posturing. I don't think there's anything really. Most of the oil companies in Calgary, in fact, all of the big ones, I think, are in favor of a carbon tax. So it's really just pandering to the support base of the party in power.
An NDP member in the House of Commons asked, with Teck canceling its project and all these blockades blocking oil out of Alberta and also commercial products from everything from pharmaceuticals to steel to food, is the federal government in favor of Alberta staying in Confederation?
I'm sure the Alberta government is.
Or the federal government.
I remember in the 70s being involved in this, and a group of people came from Japan, and after they left, I knew the translator. I said, "What did they say when none of us Canadians were in the room among themselves? What did they say?" And the answer was, they said that Canada has a really difficult situation with all these levels of government fighting with each other. They'll never get anything done. So that was 45 years ago, and it's still true. And in fact, it's probably more true today than it was back then. I mean, we got bigger problems than worrying about who's the boss of who and who's going to separate from what. I mean, there's a lot of things that need to be done quickly. And this fighting between the federal and provincial government is sort of round number 2 after the round that we had in the 1980s with Pierre Trudeau is not very productive. It's quite distracting.
Yes, and when they said different levels of government, you had Burnaby and Vancouver fighting a federally regulated pipeline. Like, what hope does a city have against the federal government?
Yeah, I mean, the federal government actually has, so as part of being involved in that, I got an education on it, and the federal government does have quite a bit of power to override smaller jurisdictions, provinces being smaller jurisdictions, cities being smaller jurisdictions, even railways, for example. You mentioned the blockades. Even railways have a fair amount of power to exert their rights to go through a land area. Now the question becomes when it's Aboriginal land that has never made a deal with Canada or with the British Crown, as is true in British Columbia. Then this question of jurisdiction is, it's hard, it's a little bit more muddy and murky. But if the federal government wants to exercise their right of the Crown, they've got actually quite a bit of power. Yeah, you might remember in the 1970s when the Quebec affair happened, there was some violence. Pierre Trudeau instituted the War Measures Act, and the War Measures Act gives the government a huge amount of power to do whatever it wants, but it, generally only in an emergency. But if all the rail shipments are blockaded and people can't get food or medicine or whatever they need, pipe, maybe that's an emergency. Who knows?
We'll have more with Hilliard MacBeth right after this.
Avon Resources Limited is a gold exploration company. with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth, going back to what we were talking about, the FLQ crisis and Pierre Elliott Trudeau invoking the War Measures Act. I remember his television interview with Jim Munson, I believe, who said, what are you going to do about this crisis? And Trudeau said, watch me. Well,
just watch me, yeah.
Just watch me. So obviously, he wasn't scared to take it, and everybody said, you're using a sledgehammer to kill a fly here. You could have, just had emergency legislation in Quebec. And, things like university professors and high school teachers were being arrested for letting their classes know about the FLQ manifesto and so on. But, do you think that this current Trudeau would do anything even close to that?
Who knows? I mean, it's like that was a pretty extreme event with that FLQ in Quebec. And
people had died.
People were murdered, and it was pretty shocking stuff.
Kids were being blown up by mailbox bombs.
Yeah, and of course, not that around that same time we had the referendums on Quebec separation, and the margin was. You'll remember better than me probably, but the margin was pretty close, 51 to 49 or something like that. It was a very close vote. So, yeah, Canada's had a long period now of relative stability politically and economically. And, generally those periods don't last forever. And, Minsky's, stability-instability hypothesis states that the longer the period of stability lasts, the more complacent people become and the more unstable the situation come. Now, he was talking about the economic aspects of it, not the political, but it's true. And people get complacent, and then they start making bets, assuming that the period of stability is going to last forever, and especially when it comes to their borrowing and their lending, and that's what leads to a financial crisis.
We've seen the Dow and the S&P take some major drops over the last few days. What's your take on it?
Yeah, on Tuesday, as we're speaking now, it's the Dow's down 3%, and on Monday it was down more than 3%, so a total of over 6.5%. Now, the record number in my 40 years experience is 1987, when it went down 22% in one day, so this is still pretty mild, 2 days, but it is starting to add up. Now, it's only been a week or two since the Dow hit a record high, so. And I calculated this morning that to get back to the low, there was quite a bad market correction in December of 2018. The Federal Reserve was raising rates, and everybody got panicked. And anyway, the Dow went down, and to get back to that same level, it would take another 20% correction to get back to that level. So the market has had a run from December 2018, that low, up until mid-February of 2020, the market gained a tremendous amount. So even if the correction expanded to 10 or 15 or 20%, we'd still be well above that 2018 level, which, when it gets to 20%, if it does, everybody's going to say, oh, it's a bear market. Well, that is a pet peeve. That's only a recent development where people are starting to call minus 20% a bear market. The technical definition of a bear market, if you go back a few more years, is a period of generally weaker prices and falling prices, and it's a period that's supposed to last for a year or two, not just a correction of 20% in a few months. So anyway, you'll hear those terms. If we get close to 20%, you'll hear those terms. So, but and who knows if it does? But if the coronavirus, COVID-19 as it's called, if it continues to spread around the world and it affects the economy, there could easily be a bear market. I think it wouldn't be surprising at all. The stock market's had a tremendous run for 11 years now. In about a week and a half, it'll be an 11-year anniversary from the bottom in 2009. And so a correction has been long overdue for quite a while. So nobody saw the virus coming. I don't think anybody saw that. So, but there's always something that happens that causes these things. And the good news is, if it does go through a bear market, if you want to call it that, is prices will get more reasonable, and bargains will appear, and investing will be more rewarding.
What's going to happen with gold, do you think?
Well, one of the things that people say, well, when we've made some changes for our clients recently to lower their risk, and nobody with us was in a high risk position to start with, but we lowered the risk even further, is we feel that the virus impact will be bigger than what the market is currently expecting. But there's limited options. So there's the government bond market, which is the other option, is very, very expensive. So the U.S. yield right now in 10 years is 1.31%. And so that's pretty minimal. And in Germany, it's minus 0.5%. So, you can't really get much return from bonds. So that leaves cash, which of course cash you don't get much return, but at least you don't lose any money. But the kind of forgotten safe haven that's been around for centuries is gold. And there's two ways to own gold. One is the gold itself, but the other way is to own the companies that mine gold. And Canada happens to be probably the world leader in having headquarters of companies that mine gold. So it's always been, since I started in the 70s, gold mining stocks has always been a sort of an angle, for Canadian investors and people periodically show up from Europe and Japan, get all excited about Canadian mining stocks, although it hasn't happened in quite a while. And as it turns out, the gold mining shares are trading at a significant discount to the market, but also a significant discount to their relationship with the price of gold. So there's lots of good gold mining companies trading at really reasonable prices. And if this thing continues, the price of gold keeps rising, these companies will start making a lot of money. And there's two aspects to that. There's the current profit that they make at the price now is $1,600 an ounce. Most of them, their costs are around $1,000 an ounce. So there's quite a big profit margin there. But the other thing is, if people think it's going to last, almost all of these gold companies have reserves. So they're untapped, unproduced gold that's sitting in the ground that they have access to is going up in value as the price of gold goes up. So they've got leverage. And I think people have forgotten about that. So they're just looking at them as a stock with a certain profit margin and all that kind of stuff. But they actually are a play on the commodity gold itself. So that might come back. That would be exciting. I mean, that's one of the issues with the virus and with the world economy right now is what they call a supply shock, which means we're going to start having trouble getting stuff from China, components for iPhones or steel for pipe or whatever. Medicines, I just saw a report that said that something like 80% of all our pharmaceuticals, like over-the-counter stuff, come from China. So all of those things, if we can't get them, people will start raising the prices of them, and then you get an inflationary surge. And traditionally, gold has been a good hedge against inflation.
So when it comes to gold, do you own the physical metal certificates? Do you tuck it away underneath the bed? Or do you just get gold mining stocks? What's the best approach here? Or should you use a variety of approaches?
Well, so there's about 4 things you can do. You can buy gold jewelry, and if it's pretty pure, like 24 karat or something, then it's pretty much you're getting quite a bit of gold for what you buy. You can buy gold coins, and Canada makes the Maple Leaf coin. You have to go to a bank and sign a bunch of forms. I went through it not that long ago. I was shocked. It took me an hour. So that's not the greatest way to do it if you're trying to invest. And then you have to worry about losing it. Where do you keep it, right? And then You can buy gold bars, and the same problem with them. They you have to keep them somewhere. And then you can buy certificates on the stock market that represent ownership of gold, the commodity. So there's ETFs and different things that trade on the stock market that say, okay, we've got a vault somewhere with a bunch of gold in it, and if you buy the certificate, your share of it will be 1/10 of 1/100th of 1% of our vault full of gold. And or you can buy shares in companies that mine the gold. So the last one is my preference. I like there's sort of like companies that are doing well, making good profit, paying a dividend, and have the chance to find more gold. Because one of the things that gold mining companies do is I mentioned a minute ago about reserves. Well, it's expensive to drill for more reserves. So they generally, sometimes they know that they have potential in area adjacent to where their mine is, but they don't have the money to spend to actually prove that it's there. So it's only when the market gets excited about gold mining companies and the price of gold goes up and they have some more profits coming in that they start spending the money to do the extra exploration, and they start finding more reserves. And so that they don't always find them, but a lot of times they do. And so that's exponential leverage. You start getting, companies making more money and then also showing more reserves. So that can be quite exciting and fun too. So I think the gold mining shares, in my opinion, is the best way to go.
And Hilliard, before we go, we have the U.S. feeling they've got a handle on the COVID-19 virus. However, you found out something that may keep it from being reported.
Yeah, there's a surprising number of very small number of cases in the U.S. So, for instance, Iran and Italy now both have outbursts with much smaller populations, but the U.S. is only reporting like 25, I think, is the last number I saw. But then this morning I discovered that if you go and your insurance doesn't cover the test, you may have to pay under the deductible or the copay or whatever it's called. On most insurance plans, you have to pay. I think one number I saw was $300, and another number I saw was $3,000. So people are probably not going to get the test. They're just, living with the. And the thing about the virus is, in most cases, it's quite mild. In fact, one of the problems with this virus is some people will have it and they don't even realize they have it because they don't really have any symptoms, but they are spreading it. So, in any case, it might be in the U.S. the reason that there's, the President Trump today said that the virus is contained in the U.S., but he might be wrong because really what's happening is they're just not testing for it.
Interesting times.
Yes, it sure is. By the next time we talk, I'm sure there'll be a lot more information about the U.S. and the virus, and we'll find out those comments were probably premature.
Hilliard, thank you so much for chatting with us.
Nice to talk to you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.